In this video today, we're going to touch upon the new inflation numbers that just came out for the month of October in Canada and what that could mean for the future of rates. This will not be another video of a realtor shilling that you need to run out and go buy a home tomorrow because rates are going to drop and there's going to be so much FOMO in the market again. If you find value in that, please consider liking and subscribing. Without further ado, let's get into it. So Canada's inflation rate cooled to 3.1%, but the cost of living for many Canadians keeps going up. Canada's consumer price index rose by 3.1% in the year up to October, down from 3.8% the previous month, but in line with what economists were expecting. Statistics Canada reported Tuesday that the biggest reason for the deceleration in the cost of living was the drop in the cost of gasoline, which declined 6.4% during the month of October alone and is down 7.8% compared to where prices were a year ago. If you do strip gasoline out of the equation, the inflation rate would have been 3.6% in October. That's slightly lower than the 3.7% non-gasoline inflation rate clocked the month before. Food prices increased by 5.4% over the past year. While that's still higher than the overall inflation rate, it's down from 5.8% annual seen in September. But just don't get it twisted. Food inflation is still very high. We're talking about 20% higher, roughly, most economists are predicting, than about 3 years ago. Now, if you look at this chart right here, what we're seeing is inflation kind of go on this rocket ship all the way up to over 8%. Now, what's kind of funny when you look at this chart is that we see the Bank of Canada's overnight rate stay stagnant, even though inflation is pushing above that 5%. And then as soon as they realize that the wheels have kind of fallen off, they increase the overnight rate. Now we see this large increase all the way up in the overnight rate while inflation is coming down. So we see the overnight rate doing its work and bringing inflation down. But many people are screaming, okay, well, why haven't they cut yet? Well, the job isn't done yet. Remember that the Bank of Canada wants to see that inflation rate between 1% and 3%. We're just over 3%, which is great, but we're still seeing a lot of volatility year over year when we are looking at inflation. And although I do believe the Bank of Canada is done raising rates, they don't want to have to raise rates again and then put more pressure on many variable rate holders and households. They want to hold the line here, have a hawkish tone so that people don't go out and spend more, which would really just fuel inflation even more and would cause them to continue this higher and higher and higher rate cycle. I think what they're trying to achieve is keep rates where they're at right now, just higher for longer until the middle of 2024 and more towards the end where we might see some cuts, but albeit they will be slow and small. Now, the other factor that affects rates is the Canada 5-year bond. We know that's pretty much connected to the fixed rate. Now, even after this news, we did not see much movement on the 5-year bond. We have seen it come down, but we haven't quite seen that reflected in the banks posting their rates cheaper for consumers. Now, there is no doubt that a lot of realtors and mortgage agents are struggling during this time. Volumes are down heavily, and it's not the good times like we once saw. That Mercedes just isn't paying for itself anymore. So a lot of people are going to be on this camp that, okay, inflation is coming down. They're going to cut rates soon. Immigration is so high. You need to get into the market right now. I am truthfully not in this camp. I think that rates are going to stay higher for longer. And even if we do see cuts next year, they will be small cuts. So if you are out there looking to purchase a home, take your time. Look for a deal, find something that makes sense, have conditions so you're protected and you're making the best decision for yourself and your family, not because some realtor posted on Instagram creating FOMO out there that you need to get back into the market. Now, if you don't believe me that house prices probably aren't going to go up on this rocket ship like we've seen in the last decade, here's a snippet from Steve Saretsky's Substack. It says, just to recap, over the past few years, various levels of government have introduced a foreign buyers tax, an empty homes tax, a mortgage stress test, a speculation tax, rent controls, and finally an outright ban of foreign buyers. Now, they are throwing everything at the housing market, and it still has remained really resilient, but that doesn't mean they're going to stop throwing things at the housing market. What I mean by that is, here's a new headline: Trudeau's government to crack down on people who profit from short-term rentals like Airbnb. Later today, they're probably going to make an announcement about this. Now, I think this will have a big impact on the investor side of the market, right? I don't think it'll change the game, but I do think it's going to have an impact on a lot of people who own an Airbnb. They're making a lot of money with these Airbnbs, for example, but now they have to rent them as long-term rentals. So the profit that they're making is going to decline. That'll either force these rentals to the market, which will allow more supply for people who are looking to get into the rental market, or it'll force them to sell, which will bring more supply to the actual resale market. Only time will tell what's going to happen in the Canadian real estate market, but I do believe that a lot of politicians are on the side of we've seen too much growth way too fast. Remember, during the COVID times, the real estate market and its leveraged money went up over 50%. That's not healthy for a market. That's not healthy for housing, where housing is supposed to be something that it's a good store of value and you're supposed to be living in and raising a family in if you so choose. Now, this is just my opinion. I could be completely wrong. Housing could go back on this rocket ship up. I know there's not a lot of supply out there, but I do think that interest rates are going to stay higher for longer. I do think we're going to see interest rates be into the 4s in the future and stay there, which means you're going to get stress tested at 6%. Now, if you look at Canadian incomes, you cannot afford a lot at a stress test of 6%. So either one of two things has to happen. A lot more supply needs to come to the market, which would bring down prices, or prices just need to artificially come down because people can't afford them. So people looking to sell their home aren't going to get the price that they think they're going to get. And eventually that market kind of finds that balance where buyers and sellers are going to start making a deal. We've already seen many house prices come down to 2019 to 2020 prices in some areas. I'm not saying that's everywhere, but it is happening and a healthy cleansing is happening. I'm not overall bearish on the housing market. I just think that incomes and prices, mostly in Ontario and BC, are just not in the realm of reality. And we're seeing a lot of other markets being sellers markets versus Ontario actually being in a buyer's market, which is surprising for a lot of people, but it is true. A lot of people are fleeing other provinces because housing is more affordable. For that reason, they see more opportunity and greener pastures to raise their family and actually have a roof over their head and have a backyard and have a home that they're really proud of. Anyways, these are just my thoughts, and if you do like them and you do support the channel, please like and subscribe. If you do have comments or anything like that where you think I might be wrong, I'd love to hear them. I'd love to hear the other side. And if you are looking to work with any realtors in the GTHA who don't just FOMO and open a lockbox for you essentially and have more value than just that, we would love for you guys to reach out to us and book a call. It's absolutely free. You can do so down below. You can text the number or shoot us an email, and we'd love to help you with all of your real estate needs. Thanks again for watching, and we'll see you next week.